this has been kind of an underground economy, I guess. For
Right.
a
So
while,
they're selling stuff on
and
eBay.
not reporting it.
Let's go with Danielle or Daniel from Ohio. Goes, this is an off the wall tax question for us trying to maximize savings with the
Okay.
IRS mandating 1099s be issued for transactions made on eBay, Venmo, PayPal, and similar services. Should people selling old junk that can actually show real losses on sold items now report them as such and deduct a loss? If not, what is one supposed to do with the 1099? Can't wait for the day the IRS shows up to look through my garage sale items.
Got it.
All right. So we got a garage sale. We got a hoarder
Yeah,
that's
yeah.
selling some stuff. And it's like, all right, well, here, I bought this, wonderful antique chest
Right.
30 years ago for,
Yeah.
$500, and they're selling it for $25.
Yeah.
Can they take the loss?
Okay, apparently they lost money on it. So, well, first of all, 1099, that's what you get. Like for example, if you're not necessarily an employee, but you're doing work for a company, you probably would get a 1099, which is kind of the equivalent of a W-2, meaning that, yeah, I did some consulting services for you. You have to send me, the company has to send me a 1099, couple $1,000, whatever the number is. I need to put that as income on my tax return. Here's something that and everyone knows. Whether or not you get a 1099, you have to put it on your tax return. And if you don't, if the IRS audits you, it's a big problem. So this has been kind of an underground economy, I guess. For
Right.
a
So
while,
they're selling stuff on eBay.
and not reporting it.
Doing some work for,
Right.
the neighbor, maybe, here,
Yeah.
let me mow your
Yeah.
yard, and they're paying them
So-
via Venmo.
Yeah. So the answer is yes. You need to report that as income. Can you take the loss? Well, first of all, why would you have a loss? Now, I could see where you would. Typically, if you have a business that sells things on eBay, you buy something for $50 and you sell it for 150. That would be a good business model. You have a profit motive, and whatever your profits are, you pay taxes on it. Now, on the other hand, if you keep buying stuff for $50 and you sell it for $5, that's a $45 loss. If you truly have a profit motive, then yes, it's deductible, but it's debatable whether you have a profit motive when you're consistently buying something at one price and selling it at a lot lower price.
But I think his question is that he does garage sales. So let's say you have a garage sale. I
Yeah.
don't think anyone's selling the junk that they have in their garage sale
Yeah.
for a profit.
Well, no, they're not at a profit. Yeah, that's just a loss. But I'm thinking,
But so if
I'm thinking he buys it at a garage sale and tries to sell it for more, but that's a profit, not a loss. Unless he's trying to say, well, I bought this $10 vase that's really worth 150. No, it's what you paid for. It's not the value. Anyway, the basic rule is this: if you have a for-profit business, if that's your motive, and it's run like a business, right? Then you can take those losses. If it's a hobby or just a little bit here and there, no, you can't take those losses.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.